I'm sharing with you for free my best scalping strategy on the 5-minute time frame, which works for all types of markets, Forex, crypto, gold, oil, and it also fits any trading capital. Whether you have just a few $100s or several tens of thousands, you can use this strategy to make money. The very first rule for this strategy to work is that the market must be trending. You're going to avoid trading during flat market phases, which are also called ranges. As you can see with this strategy, we're not going to be interested in the market while it's bouncing back and forth in a range. We're going to wait for the market to be in a trend. For today's example, then we'll start trading long. You can see a moving average on the screen. It's the 50-period moving average. The 50-period exponential moving average will act as support in an uptrend or as resistance in a downtrend. You can see that when the market is ranging, like here, the moving average is right in the middle of the candlesticks. On the other hand, when the market starts trending again, you'll see that prices move above the moving average, so this moving average acts as a support for the prices. The second technical indicator for this strategy is the RSI. You can set it to 7 periods or 14 periods. Personally, I use it with 21 periods because it's much more accurate. And as you'll see with this strategy, we're also going to use the 50% zone of the RSI, which is shown in yellow here. What we're interested in is the convergence between the bounces on the 50-period moving average on the chart and the bounces on the RSI 50 zone to give even more weight and power to our strategy and to avoid traps. As I mentioned earlier, to implement this strategy, you need a trending market. Once you have an upward movement in the market, as is the case here, you'll start paying attention to the chart. Then, you'll need to be patient while the market is ranging. You won't do anything at all during this time. You will wait for price zone breakouts, for resistance breakouts that can release bullish liquidity. With this 5-minute scalping strategy, we're going to take full advantage of it. Now, let's get right to the heart of the matter. As you've probably guessed, in this strategy we're only looking for buys since the previous trend is bullish. We don't go against the trend, we follow the trend, so we'll wait for the market to give us a signal that the trend is resuming. You can see that it's going to happen here because the market is about to break through the resistance that's been holding it back for a while. You can see it all along here. The market is stuck below this price resistance and can't manage to break out to the upside. And finally, here, we're going to get the breakout candle on the 5-minute chart. Once we have the breakout candle, we'll wait for the price to come back to the 50-period moving average before we start looking for buying opportunities. You can see here, during the pullback, the market comes back to the 50-period moving average on the chart and on the RSI. You can see at the bottom that we're going to bounce off the 50 to 55% zone on the RSI. And so here, you have a first buying opportunity. The market broke through the resistance, started rising again, made a small pullback, bounced off the 50-period moving average, and bounced off the 50% zone on the RSI. So you have your first buy here. For the stop loss, you'll place it just below the 50-period moving average. Because if the market drops back down and breaks below the 50-period moving average, it will be a false signal for buyers. And so, since you don't want to lose your money, you set a stop loss just below this price zone to protect your trading capital. You can see that when the uptrend resumes, you'll have several buying opportunities. You have the first one here. You'll have an excellent second buying opportunity here. Look, once again, the market is going to pull back to the 50-period moving average before heading back up and making a new high. You can see that on the RSI as well, the market is going to bounce off the 50% zone. That means the market is giving you a visual signal that it's going to keep rising, and the RSI is also indicating that it's going to keep going up with this bounce off the 50% zone. So you're in a position to take another buy. Just like before, the stop loss is set below the 50-period moving average, and you're aiming to capture as many points as possible on the upside with an excellent risk-to-reward ratio. On top of that, you can add small resistance zones which, once broken, will release bullish liquidity. This is very simple price action with higher lows, higher highs, price zones, bounces off the 50-period moving average, and off the 50% level on the RSI. And as long as the market shows you a bullish structure and bullish momentum, you can keep trading long on small pullbacks, waiting for the market to come back to the 50-period moving average and the 50 level on the RSI to trade a buying bounce. When do we stop trading a trend? Well, when the market starts to turn around, you can see it right here. We start to frequently drop below the 50-period moving average and also below the 50% zone on the RSI at the bottom. And those are the first signs that the trend is starting to lose steam. Even though, as you can see, there's one last bullish move here to catch if you have a bit of experience. Right after that, the market will break below the 50-period moving average, bounce off the 50-period moving average, and fail to move back above it. So here, you have the indication that the 50-period moving average is now becoming a resistance. The trend has just reversed. You have the support break and the break below the 50-period moving average. On top of that, you also have the break below the 50% zone on the RSI. As you can see, the market will now bounce down off the 50-period moving average, and the RSI will bounce down off the 50% zone. The market will move around below the 50% zone. According to the RSI, that's the definition of a bearish trend. Visually, when it comes to candlesticks, it's the same thing. You can see that the market is below the 50-period moving average. And once again, with simple price action and basic technical analysis, you can see that the market has turned downward. So, you simply wait for the market to give you new buy signals. As long as you don't have any buy signals, you do nothing. A big part of a trader's job is patience. And any strategy can be profitable, but you have to know how to adapt it to the right market context. So, when you have a strongly bullish market and you want to trade long, you can see it on the chart. And the chart, the candlesticks, also give you signals for when you should stop buying. The uptrend reverses. We break through supports, we break through the moving average, we break through the RSI. In terms of price action, we start making lower highs and lower lows, which is simply the definition of a downtrend. So, you wait, you're patient, and you wait for the market to start rising again to put this very simple strategy back in place.